Where are you looking for opportunities as we head into this fresh week?
Thanks for having me on the show. And I do think that the U.S. relative to the rest of the world is in a stronger position. Obviously, we got the CPI numbers and they were better than expected, and the markets rallied in a big way last week, as you mentioned. I do think that this is only one data point, and the market is really looking at where we are with labor. So we do know that commodity prices and supply chain problems in the U.S. have helped lower goods prices. But the labor market, that's something that's an area that's very sticky. And the Fed's going to have to see more data points before they're going to change course. We do think that they possibly could decelerate, but they're certainly not going to stop at this point until they have inflation under control. Again, one data point is not going to make them change their decision. That being said, we do think there's more strength in the U.S. relative to the rest of the world. And you are seeing that with a strong dollar in the U.S. And that leads us to believe that there's certain areas that we should focus on where there's tailwinds.
Like what?
So some of the tailwinds that we believe that are going to drive performance over the next several quarters are in the EV space, electric vehicles, and the ecosystem surrounding electric vehicles. Lithium, that is the element that used in batteries to create the power for electric vehicles, is in short demand. So we're constantly talking about lithium because we just think that is a great commodity to own at this point because of the shortages and the expected growth in the EV market over the next several years. Every market, whether it be the U.S., China, or the Nordic countries, they're increasing their sales, auto sales of EVs, and that's going to continue going forward. And there's other areas related to climate that we think make sense, solar and wind, and it's all buttressed by the Inflation Reduction Act and the tremendous amount of spending that's occurring from that act over the next 10 years.
Given the softer CPI, and quite frankly, we got this warning from Fed Governor Waller saying there's still a long road to hoe. Is that changing the way you're seeing the assets you have under management?
Well, when I think about managing portfolios, I think about including some risk assets like exposure to themes like electric vehicles, as well as cybersecurity, another area of tailwinds, to be included just as a portion of your overall portfolio. You have to manage risk. Certain areas are more volatile than others. Growth momentum is certainly susceptible in this type of market. We do think, you look at latest earnings reports, and tech companies are certainly impacted by higher interest rates. So you have to use it in a moderated amount in an overall portfolio, and different clients have different risk levels. So it really depends on the type of client, but over a long period of time, certain themes and exposures like lithium and battery technology, solar and wind, they're going to play out. They're certainties. You may not get that in the short run in terms of market return, but over a long period of time, you certainly do. And we operate in the ETF space. Yeah. So you're not just buying one company, you're buying several companies inside of an index. So that gives you the opportunity not to be slotted into only picking one or two or three potential winners or losers.